This is a simple video to explain what is a market order. Now, stock exchanges provide platforms for the traders to trade stocks. Some examples are New York Stock Exchange and NASDAQ. Now, the trading activity on an exchange, on a market, is recorded on a trading book. And back in the old day, it was actually a board where people write on it with chalk, and nowadays it's more of an electronic form of an order book, or I think brokerage companies now refer to it as type 2 data, where you see the activity. I'm going to show you a screen shot in a minute. And each stock has its own trading book, and trading books are much more active during trading hours, but you actually have activity, what's called extended hours, or you could even have leftover trades on a weekend, like the one I'm going to show you in a minute. So we place our trade orders with broker companies, and the broker companies will place our orders on corresponding trading books for individual stocks. So this is an example of a trading book where you have on the left side, the people who want to buy, on the right side, people who wants to sell. And this is just an example that I actually screenshot on a weekend, so you don't really have that much activity. During the day, you will have significantly more active and deep trading book or an order book. So what's a market order? Well, market order is ordering to buy at the best selling price or ordering to sell at the best buying price. Now, notice, say, in this list, these are actually listed or sorted based on the price on the buy side, on the sell side. So if I'm actually selling right now, I would be selling at 88.85 with a market order because that's the best buying price right now. And if I were to be buying, well, then I'll be buying at 88.87, and because that's the best selling price right now. And notice there's a part that says sell and buy, and those are the best prices on each side. However, you need to notice that the size of these prices are different. So just because I'm actually buying doesn't mean that all my order will be filled in 88.87, for instance. So these are some examples. I would just say buy 12 shares at market price or sell 9 shares at market price, just examples. There are certain risks with a market order though, and they are risky. So an example, a trading activity is fast. So when you place a market price, you actually may get a price that's different than what you thought it was. It could be better, it could be worse. It could be substantially better, it could be substantially worse. So market orders can be quite risky. Another example, and this is actually very important, the best market price may be only available only for a few shares. So in the example, for instance, if you want to buy or sell at 88 for 2 shares, it's just for 2 shares that's available. But if your order was bigger, then only 2 shares will be going at that price. You may get desired price for those few shares, and you may get the rest of your order at a very different price, right? So for instance, in this example with $88, 2 shares, and basically want to sell more, well, the rest of your shares can be sold at a substantially lower price. I used the $10 as an example to exaggerate it, but it can even be lower than that. So market orders do carry risks, and you should obviously read the disclaimer on this, but that's all I have for market risk. So thank you. Bye.